What are FII investments? So in this session, we will go through the basic question, what is an FII and what is an FII investment? FII, as you might already know, it is foreign institutional investor. So what exactly it is what we are going to find out first in the introduction. And then we will see what are the SEBI regulations regarding FII. So there are some regulations, general obligations and responsibilities, investment conditions and restrictions, registration of FII, including sub-accounts, action or penalty in case of default, and preferential allotment by listed companies to FII. So these are the classes of SEBI regulations. We will briefly go through what exactly some of them means in this introduction. So first, what is an FII? A foreign institutional investor means an institution that is incorporated or established outside India and proposes to make an investment in India, mainly in securities, is deemed as an FII or foreign institutional investor. Also, a domestic asset management company or a domestic portfolio manager who manages funds that are raised or collected or brought from outside of India for investment in India on behalf of a sub-account is also an FII. So that is by definitions what an FII is. Now we will go through what are SEBI regulations regarding FII. So in this list, we define registration of FII, including sub-accounts first, and then we'll go through some of the classes of SBI regulations regarding FII very briefly, okay? So that is basically SEBI regulations, and we will first take a look at registration of FII with SEBI. SEBI is Securities and Exchanges Board of India, who is the regulatory authority in India. So for buying, selling and dealing of securities, a foreign institutional investor must register with Securities and Exchange Board of India. So that is where they need a certificate of registration. So the certificate of registration is granted to an FII after it considers the following matters, namely applicant FII's financial performance, applicant FII's professional capacity, applicant FII's financial strength, applicant FII's general reputation of fairness and integrity. So everything is considered before granting of certificate of registration. Next is applicant FII will be subjected to regulation by an appropriate foreign regulatory authority. So that is also a condition which is there for them to obtain certificate of registration. So it will be subjected to regulation by an appropriate foreign regulatory authority. Applicant FII should also obtain other permissions under FEMA. FEMA is Foreign Exchange Management Act 1999. So they have to obtain permissions under FEMA. FII applicant should be established or incorporated outside of India as a pension fund, mutual fund, investment trust or asset management company. So that is also a condition for them to receive certificate of registration from SCBI or SEBI. FII should also be in existence for the past 5 years at least. That is also one other condition. So all these conditions have to be satisfied by the FII applicant for them to be legally permitted to invest in securities outside their country of incorporation, that is in India. Okay. Next is investment conditions and restrictions. So SEBI has permitted FIIs to invest in securities of the Indian capital market according to the provisions listed as under. Investment is permitted in primary and secondary market, and this includes investment in shares, debentures, and warrants. Investment is permitted in units of mutual funds in Unit Trust of India. Investment is permitted in commercial papers. So these investments are permitted by SEBI. Investment is also permitted in dated government securities. So these are permitted by SEBI. An FII must apply for a renewal certificate for renewal 3 months before the expiry of certificate of registration. So for an FII to continue functioning in India, they have to apply for a renewal certificate for renewal 3 months before the expiry of certificate of registration. Next is preferential allotment by listed companies to FII. So SEBI grants permission to the listed companies in order to make preferential allotment to registered FII under the following conditions. So the conditions are: companies secure the consent of shareholders, which means the companies making preferential allotment to registered FII must secure or obtain the consent of the shareholders after conducting annual general body meeting. Next is the preferential allotment extended to FII must be within limits, the ceiling on FII holdings. So that is the limit. And also price fixation. Price fixation should not be less than the highest price during the last 26 weeks on all stock exchanges. So it should not be lesser than the highest price. So that is also one condition under which SEBI grants permission to listed companies so that they can make preferential allotment to registered FIIs under these conditions. So this completes an overview on FII investments. Thank you.